Hello traders, Gary Wagner here. It is 10:45 in Honolulu, 4:45 in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 6th day of December, 2024, and this is the evening report for gold and silver, our weekend review. Traders, today the Bureau of Labor Statistics released the most current U.S. employment data, revealing that the American economy is robust, generating 227,000 new jobs to payrolls last month, slightly exceeding the expectations of 214,000 and representing a substantial improvement from the previous month's modest numbers. Leading up to the last 8 trading days, we have seen really strong price ranges after hitting a high just above $2,800 and then selling off to an intraday low of $2,567. The market rose to approximately $2,748, $2,749, and then on Monday, the 25th of November, had one of the most significant single-day drops this year, a drop of $91.80. However, since that point, you can see that we have been highly range-bound with all of the bodies trading above $1,650 and all of the bodies trading below $1,674. Even with these couple of wicks that enhance or magnify the range, we're still looking at a range from about $26.30 to $26.90, a $60 range over the last 8 trading sessions. This muted and narrow trading range that we have seen recently doesn't give us the kind of clarity that I would like to have to say that we have a truncated C, which, as I've talked about throughout the entire week, is an extremely rare occurrence. Typically, when we get action like this, it comes in the form of a compression triangle rather than a standard zigzag. Because in all the documentation I have read about Elliott Wave, a traditional ABC correction is typically labeled as a flat, meaning A and C are equal, or a standard zigzag that infers that the final C wave culminates below the low or completion of the A wave. And we haven't gotten that. It seems likely that either it is a zigzag formation that hasn't completed, or what we are going to witness is the beginning of a compression triangle in which we get a series of lower highs and higher lows as it goes through a 5 count and then breaks through the thrust if we're going to, as I believe we will, re-enter a bull count at the beginning of 2025. Gold is currently settling with a 10-cent decline on the day, 26.5590. Unfortunately, I do have to report a loss on our last trade alert. We recommended placing a good till canceled sell limit order at $26.60 and placing a tight stop $6 above that at $2,666. I draw your attention to today's high, $26.6790, meaning we did enter the trade and were stopped out with a $600 loss per COMEX contract, or $6 per troy ounce.
Before I go into the developments in silver's Elliott wave pattern that happened over the past week, I wanted to make a clarification. Up on the screen, I have our current wave count overlaid on a daily candlestick chart. And if you look closely, you will notice that the fourth wave dips into the territory of the first wave, which breaks one of the 3 cardinal rules in Elliott wave. However, when Ron Nelson Elliott created this charting technique, he was solely focused on the closing price of the session, not the highs and the lows. For example, this wave count seems to not make sense and invalidate itself. But when we switch that to a line chart, and the line chart is based only on the closing price, you will notice the fourth wave does not dip into the territory of the first wave, and this is indeed a valid count. As far as where we are in our current wave count, we have definitely completed our A wave. However, I don't see this little blip right here as being our B wave. I think that's highly improbable. I think our count will look more like this, as I believe are still within our B wave. And if true, that would mean that we should see prices move higher or move sideways during next week. We couldn't finish this show without at least mentioning Bitcoin's historic milestone that was reached yesterday, as Bitcoin broke above $100,000 for the first time in history. This rally in Bitcoin was brought on by fundamental, technical, as well as cyclical bullish influences. Obviously, this rally was helped along greatly by President-elect Trump and his change of heart towards Bitcoin and cryptocurrencies. But how much higher and how much longer will this last? Up on the screen, we have Bitcoin on a logarithmic scale, as well as the blue lines that represent each halving date. And this orange line simply connects the dots from one halving price to the next. Every single previous cycle, the tops were way above this orange line. This cycle top is around 90% above the line. In the third cycle, it is about 80%. And in the fourth cycle, it comes in at around 70%. So approximately a 10% decrease each cycle. If this pattern continues, we can expect Bitcoin's price to come in around 60% above this dotted line here. Now, when that cycle top actually comes in will determine exactly what price we will see, but let's just assume that the high comes in July of next year. That would mean that we still have $65,000 left to go before we reach our cycle top. That price would put us at around $175,000 for the peak of this bull cycle. And I very much believe that before we hit this cycle top, we will see at least one good correction.
This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.